Hello and welcome to the CEO at BT series. I'm Sakshi Batra. Here we bring you up close and personal conversations with the creme de la creme of India's C-suite to fetch you pertinent industry insights and also personal anecdotes. Today, Business Today's managing editor Anand Adhikari is in conversation with Jairam Sridharan, managing director, Piramal Capital and Housing Finance. The financial services sector in India has witnessed significant growth over the past few decades, especially in the metro and the urban areas. However, there remains a vast untapped potential in semi-urban and rural areas, commonly referred to as Bharat. With the increasing penetration of smartphones and internet connectivity, there is now new players and a new low-cost operating model to reach out to these underbanked and unbanked people in the far-flung areas. Let's hear it from the industry veteran, Jairam Sridharan.
Thank you, Jairam, for giving us time. Tell us, how big is the Bharat opportunity in the semi-urban and rural areas, especially for the BFSI sector? Let's start with that.
Yeah, see, semi-urban and rural areas have always been important, but they have become a lot more important in recent years. If you looked at our market 10 years ago or 15 years ago, yeah, more like 15 years ago, what you would see is that in terms of new credit offtake, if you looked at semi-urban and rural, they probably formed about 30% of the new demand that was coming up in these markets. The bulk of the demand was in the metro cities, the top 8 cities of the country. This has slowly been shifting, and in recent years, that shift has slightly accelerated. So if you see 2 years ago, 2021, right after the pandemic, if you look at the total demand, you would have seen 43% of total demand coming from semi-urban and rural. Now, this had already gone up from about 30% to now 43%. But in these last 2 years, that 43% has become 50%. So as of last year, 50% of new credit demand in terms of new credit inquiries that happen on the bureau, etc., comes from semi-urban and rural, and only about 1/3 of the demand is in the metro markets. So metro's contribution, the top 8 cities' contribution in number terms to credit offtake has been diminishing, and semi-urban and rural have really been going up. Urban has been roughly flat, right? So that's been the transformation. So now, if you look at the retail lending business in the country, there's about 80-85 lakh crores of retail lending outstanding in the market, and about 1/3 of that, let's call it 25 to 30 lakh crores, has been in semi-urban and rural markets. So it's a fairly large size already and growing quite robustly.
Now, I was just looking at some of the banking, this credit outstanding data, and I saw that the contribution of, the semi-urban and the rural was around 21, and bulk is from the metro and the, urban areas. How do you look at that number, since you talked about the incrementally how, the credit is?
Basically, there are two things that drive this. In number terms, as I said, about 50% of incremental credit demand is coming from semi-urban and rural, 50%. However, approval rates for customers in semi-urban and rural tend to be lower, and semi-urban and rural tend to be smaller ticket size. Both of these factors result in AUM contribution of this segment being smaller than this pure credit demand contribution. Now, why are ticket sizes smaller? Of course, the economies themselves are smaller, houses cost less, businesses cost less, etc., and that's a very natural thing, and that you should expect. But then why is approval rate lower, right? Approval rate, just to define approval, by approval rate I mean if 100 people apply for credit, what percentage of them actually end up getting approved by the financial institution and actually get the credit. That ratio tends to be lower in semi-urban and rural markets. Now, why is that? That tends to be because it is harder to underwrite customers who are in semi-urban and rural markets, because they don't have paperwork which is as robust, their salaries are less documented and less regular, and they don't have as deep credit bureau records as somebody in an urban market might be. All of these make it harder to underwrite them. So that results in a lower approval percentage, which along with the smaller ticket size results in smaller AUM contribution.
Right, and I was also studying the deposit outstanding share is slightly higher, I think 25%. So can we say that there's a huge market on the investment and the saving side in the semi-urban and rural areas?
No, let me put it this way. There is a metric that RBI publishes called credit to deposit ratio. Right, in any geography, how much is the credit that is outstanding and how much deposits actually get originated from that market, and you can keep comparing them to actually get a sense of how different markets are in terms of credit versus deposits, right? In urban markets, you would find that credit deposit ratio is fairly high. So deposits are quite high, but credit is even higher. Credit availability is even higher. In many of these smaller markets, you would find credit deposit ratios low. The deposits are not that high. However, credit is even lower than the fair share. I don't think it's a direct correlation. Like, I don't think you can look at deposit numbers and try and guesstimate how much credit opportunity might exist, or it just shows that banks and financial institutions are willing to take your money if you are in smaller markets, but they are less willing to give you the money because they are less sure about your precedence and your ability and willingness to repay that loan.
Right. So before coming to the player part, just one question on the per capita income, $2,500 dollar. I was reading one of the report from SBI which talks about $12,500 by 2047. But people also talk about this rural-urban divide. I mean, they said that the rural is almost half in terms of per capita than the urban. How do you look at this number today, and let's say 25 years down the line when we are talking about $12,500 per capita income? I'm sure the share of rural will change.
I think rural has been lower per capita income as far back as one can remember, right? And I don't honestly see any particular trends which are going to result in closing of the gap too much. I think urban continues to be very, very strong. What we are seeing instead is a lot of areas which used to be called rural yesterday are today being called semi-urban and urban. Right. So essentially, whoever remains in the rural bucket actually is by definition the lower income population, because the rest of them have moved out of that definition. Now, if you look at the economic activities that are actually taking place in these markets, if a lot of rural is about agriculture and agriculture-led income, then it is always going to be a bit of a problem, because in India, agriculture has not been as productive, and hence the income generated from agriculture and allied activities have been lower. Secondly, the very fact that a lot of credit has not been made available in rural markets in the past means rural markets have not been able to leverage themselves and actually result in bigger economies. Credit is the grease that makes the economy go around, and if that grease doesn't exist or is less, then it's hard for the economy to grow and move forward. And that has been the unfortunate situation with a lot of the semi-urban and rural markets in India. It is changing, but that has been the case in the past.
Right. Now let's come to the players part. Banks are big player. I was just looking at some of the data from SDFC. I think more than 50-55% of their branches are now in rural and semi-urban areas. Similarly for ICICI and other private sector banks. When you look at the players, how strong are banks in this market? Is there something changing?
I think banks have always been very, very strong in these markets, particularly public sector banks, and they continue to be very strong. Now, public sector banks have lost market share in the country as a whole as far as lending is concerned. However, in the rural markets and the semi-urban markets, their hold is still quite strong. Now, things are impacted a little bit by the fact that the number of public sector banks is now smaller. and also the fact that a lot of NBFCs have come up and a lot of NBFCs want to serve these markets. We will come to that in a moment. But public sector banks are the first category to look at. They are the most important players in these markets. The second level is increasingly private banks. There used to be a time, 10 years ago, if you had asked this question, I would have said after public sector banks, the next most important category is NBFCs. But that is not actually the case now. Now, private sector banks are the second most important players in these markets because private sector banks do actively participate in this market. And once you have gone, the larger private sector banks have all gone to 4,000, 5,000 plus branches. At that scale, you are perforce a very big part of the semi-urban and rural market.
And the
right?
metro and urban is also saturating.
Fully saturated. There are only so many branches you can open, and beyond a point, like you have to go to the other markets, which is the kind of stage that the larger private sector banks have reached already. So their presence in semi-urban and rural has been growing and will continue to grow. So today I would say they are the second most important category. The third category is NBFCs. There are a lot of NBFCs, and I would put NBFCs into two broad formats as far as this topic is concerned. One is national scale NBFCs and the other is localized NBFCs. There are some national scale NBFCs which are present across most markets, most geographies, and you will find them whether you are in Gujarat or you're in Tamil Nadu or you're in Telangana. You're going to find some of these players, right? So you're going to find a Bajaj, you're going to find a Shriram, you're going to find a Piramal, you're going to find some of the larger players, Chola, some of these Mahindra, some of these large NBFCs, you are going to find in practically all the markets. Now, but apart from that, what we see is that in each geography, there will be some localized NBFC players who have strong presence in that market and who are trying to create a mark for themselves and who have created specialized and localized solutions for that market, right? And so if you go to Rajasthan, you'll find a very different kind of player. And if you go to Delhi NCR, you'll find a very different player. And if you go to Tamil Nadu, you'll find a very different kind of player, right? These players are all important, but the national scale NBFCs are much larger than these localized NBFCs. So the pecking order then is public sector banks, followed by private sector banks, followed by national scale NBFCs, followed by localized NBFCs. That's kind of the pecking order. There is one category I did not speak about, which is fintechs, right? You might say, hey, what about fintechs? Unfortunately, fintechs have actually not made much of a presence in these smaller markets yet. I'm sure it will happen, but so far, it has been a lot more large market focused and metro and urban focused play has been what fintechs have largely been about, and so their presence in semi-urban and rural is minimal.
Okay. There is also one category called this small finance bank. Which the RBI came out with a differentiated banking license, and we have 10, 11 SFBs and they are also scaling up. How do you see these players, because they are also diversifying? Earlier they were purely microfinance, and now from microfinance they are getting into the secured and other assets. So how do you see them as one of the players in the rural and semi-urban market?
It's an evolving play. Like, I don't think the model is fully established yet. I think they have established themselves, of course, as you rightly mentioned, as microfinance lenders. So on the lending side, that's very well established. Then once they became banks a few years ago, the first order of business naturally was to originate deposits, because as banks, that's the one big thing that is different than being a pure play MFI, is that you can do deposits. So for a while, the institutions have focused on actually building a deposit franchise, which is absolutely the appropriate thing to do. You're right that all the SFBs are attempting to build a multi-product portfolio today. I would say that it is still early in that game. The results are to be watched, and the jury is still out on whether that will succeed. And will they become more like private sector banks in these spaces and occupy a large part of the market, or will they remain small niche players in particular markets? They have strong presence in certain product categories, but national scale presence in lending might still elude them. So it's not clear exactly how that's going to play out.
Okay. Now coming to the product part, you have banks. I mean, they have a bouquet of products, because they are quite broad based. Are these, like you talked about the national level, NBFCs, the local level NBFCs, SFBs? I mean, are they competing in the same market segment in terms of product, or they have their niches?
See, India is a very large market. Number of players can be large, but you will still find everybody able to attract their particular kind of audience. If you look at India as a whole, from an income standpoint, India is an 80% self-employed market. However, if you look at customer bases of banks, etc., it's the exact opposite.
So business loans and the share of business loan you're saying?
The share of self-employed customers is going to be like 20-30%. Right? It's 70-80%, it's going to be salaried customers. It's kind of the flip of where the citizenry is. Most of the citizenry in India is not salaried. It's non-salaried in various kinds. Either pure play, they run their own business, or their gig, or they are contractual workers, or they are doing part-time occupation. There are all sorts of things, but pure play salaried employment is, by different estimates, between 10 to 20% of the workforce or the labor force in India. If you go to the smaller markets, this reality really strikes you in the face, that practically everybody you would run into is a non-salaried individual. And even the people who call themselves salaried are unique and very different from the kind of salaried you run across in the major markets. In a big city, when somebody comes and says, hey, I'm salaried, I work at XYZ consulting company, or I work in ABC publishing house, and I'm a big shot journalist, or I work in a bank, or whatever, right? You know what to expect. You know they'll have a salary slip, you know there'll be credits to their bank account, etc., etc. You go to a small town, and one Ramesh Yadav ji comes across, and you say, "Aap salaried hain ya self-employed?" And he says, "I am salaried." And you say, "Aap kya karte hain?" And he will say, "मैं साड़ी की दुकान में काम करता हूँ." Now, the fact that he works in a sari shop means he is not going to have the same kind of documentation that you and I have, right? He will have a little bit of money going every month to his bank account. The rest of the money depends on how much sales happen in the sari ki dukaan, and the proprietor of the shop is going to pay him in cash at the end of the month, depending on how much sales he had, right? That's a very different kind of customer base. But in the same geography, you will also have government schools and teachers in the government schools who are also salaried customers. You will also have people who are running small restaurants, rickshaws, taxis, and you will also have people who are running big schools, who have established a school in the area, who are running a college, whatever it is. These are all very different profiles. There are different kinds of institutions that will serve these customers, right? If you are in a very formal job, for example, you are in the local police, you are in the local government hospital, etc., etc., banks might be able to serve you really well. Especially if you are, let us say, in government, you are a grade A person or a grade B person. But if you are grade C, grade D, peon level, then the banks might not serve you. Then there might be somebody else who can serve you, etc. Similarly, going all the way up and down that chain, you will find different classes of players who are focused on specific parts of this population, right? And so there is enough room in the market for lots of different people to cohabitate. We are not running into each other in these markets, and we are able to serve customers really well by targeting specific niches that are most aligned with your strategy, your cost of funds, and your ability to serve the customer.
Right. So you talked about the non-salaried and the self-employed. What about the credit assessment part? I mean, is there enough data with CIBIL about these people? I mean, how you go about it? Assessing the credit worthiness of this class of people.
Yeah, I think the best way to say it is there is more data than people imagine, but less data than we would like. Is probably the best way to say it. There is a lot of data out there, so it's not a problem. It's not as if you go into these markets and everybody is a no-hit on the bureau. It's not like that. Even in these markets, we see anywhere from 11 to 15% of through the door population or people who come in asking for loans. 11 to 15% of that population does not have a bureau file. But the other 85 to 90% actually have bureau files. So it's not a problem. So most of the people have bureau files. Firstly, it's not a big issue. But the bureau file might be thin, meaning there might not be that many trades on it, and the oldest loan that is shown on the file, etc., might be relatively young. So you don't have deep, recurring, demonstrated experience of credit, which makes it a little bit harder to catch the credit appropriately or to predict it, with great precision. However, credit bureau reports exist. It's not a problem. The next thing to think about is income. Do you know their income? Because when you're underwriting a customer, you're underwriting their willingness to repay, which is the credit, and you're also underwriting their ability to repay, which is how much money do they make and what is the regular cash flow. This second does tend to be a little bit of a problem because salary slips are not common, tax filings are very uncommon, and tax filings are not entirely dependable, and the bank accounts of these individuals also tends to be sparsely used. So it's not as if every transaction that happens with them is actually reflected in the bank account. It might not be reflected at all. So if somebody is in a tier 2, tier 3 town and runs a small pharmacy, let us say, or a small grocery store, and you want to find out how much money does he actually make, it's highly unlikely that you will find any documentary evidence about how much money he makes. You will probably have to make some guesstimates. You might want to watch the shop and see the footfall. You might want to make estimates based on how large the square footage area is, how much inventory the person is carrying, and based on that make some estimates. Or you might want to take a look at their informal records. Every shopkeeper in India carries a kacha khata, and in that they are meticulously recording what's going on. So you might need to actually take a look at that and use that to assess ability to repay. So assessing ability to repay is harder in smaller markets compared to assessing willingness to repay. Willingness to repay is just as easy or hard as it is in the urban markets. But ability to repay, it is much harder in the smaller markets. The third thing that's harder in the smaller markets is documentation around property or security. So if somebody is saying that I have this land or I have this this flat or this apartment that I'm actually putting up as collateral, and against that I want to borrow for my business, you need to be able to assure yourself that this land or this property actually belongs to this person. And for that you need to look at the paperwork, you need to look at the ownership records of that property going back a few years and make sure that it legitimately belongs to this person and that no other claimant is going to turn up tomorrow. That process does tend to be harder because many of the people might be sitting on ancestral property. There are paperwork missing, there are gap years in which you don't know who owned this property in between. There are some gift deeds in between, somebody gifted this to my mother and then I started living here, etc. This type of stuff is common, which makes property assessment a lot harder as well.
And you also travel a lot to these geographies, and I heard that you also a travel junkie. I mean, any
I do like to travel, yes.
Any destination you found while going to these areas?
Well, I love going to a lot of these markets. These small markets are just really good to get a feel for the market. So if you go to Uttar Pradesh and you're just traveling by road, and you stop at any small kind of village town in between, you get a real feel for what's going on, what is construction activity, has Pradhan Mantri Yojana made a difference or not. You can actually look around and you will see half brick structures, and you can go ask the guy and ask, is this did you get PMJDY subsidy, right? And you will get to know, and you get a feel for whether some of these government schemes are actually making a difference in these markets or not. By the way, short answer on that question, absolutely. Like PMJDY is a big deal in these small markets. It makes a massive difference. You see a lot of houses which would not be constructed if it was not for PMAY. So you see a lot of that, and you go to the northeast, for example, and the whole structure of the village and the town is very different. Everything is around government jobs. Everybody wants to do a government job, but the jobs are very few. So you can see that the economy kind of works very differently. You go to the south and you go to more agrarian belts, you still find education levels very high, roads still extremely good, and a certain level of sophistication in the way kind of agriculture is being done or produce is being taken to markets. Whereas in the north, you look at how the APMCs operate, etc. It gives you a very different kind of feeling about the state of that market. So yeah, no, I love going to these markets and getting a sense of how our customers can live and operate, and the India is changing, and you can actually see that all around you. I was joking with somebody the other day that when I see my kids Hindi textbook, and there are all these pictures of villages in there, and people in huts, and like people sitting on a chabutra around a tree, and the panchayat is sitting and deciding stuff and so on. I was joking that those villages don't exist anymore. If you go all across India and you look for a village like that, like the one that is there in Hindi textbooks, you will not find anything because there is no such place. Because everything is converted. You don't see kacha housing at all. By and large, you see at least semi-pakka housing or pakka. You see kind of dish antennas everywhere. You see kind of the blue screen of the TV coming out of every house. You see kind of two-wheelers parked. Even in the most remote place, you see roads which are passable. When I was young and I used to go to my village, the last 10-12 kilometers, there was no road, and you just had to navigate. Like it was crazy, and there were no street lights, and it was totally crazy. Those things are largely things of the past, and I think what we think of as rural today would qualify as urban in if you go back 2, 3, 4 decades. Our standards have gone up, and that's a great thing. I mean, that's what progress is, I presume.
And you talked about textbooks. I was reading that you also take out time to teach your kids physics, Hindi, and
that is true. That is true. It is a great passion of mine to spend time with my kids. Yes, actually, physics, math, and Hindi. Those are my subjects. Those are the 3 things I like to teach my kids.
Surprised to see the Hindi.
Oh, I love teaching Hindi. I love reading Hindi poetry. I'm a big fan of languages in general, but Hindi is a great passion. Yes.
Great. So thanks, Jairam, for telling us the nitty-gritty of this semi-urban and rural market and the potential they offer to banks, NBFCs, fintech. Thank you, Jairam, for all the information.
It's been a great pleasure.
Yes, thank you.